Hello everyone, welcome to my channel. Today let's predict Tesla stock. I am a swing investor, and I will not consider the price changes of a stock 1 month later. This channel only makes short-term price predictions for stocks, usually 1 to 3 weeks. Welcome to subscribe to this channel. Tesla stock did not fall too much on Thursday, which makes the stock still technically in an upward trend. The stock's trading volume on Thursday was significantly lower than the previous 2 trading days, which shows that the market has become very cautious as the stock price consolidates at a high level. The stock has risen for 4 consecutive weeks. The current price of the stock has a 60% profit margin compared to the lowest price in April, which means that the stock is currently in a pressure area and the stock price is facing a correction pressure. Through the 30-minute chart of the stock, we can see that on April 25th, the stock price was strongly pushed to a higher level by the bulls, and then the stock price always fluctuated in a small range. It was not until May 8th that the stock's consolidation cycle ended. This area should have accumulated a lot of long capital. If the stock price pulls back later, then this area will become the key support position of the stock. On May 9th, the stock's trading volume increased significantly. On that day, the stock price broke through the consolidation area and rose further. There should be a large amount of capital outflow here, but these chips were eaten up by the bulls, so $305 is regarded as a key support position for the stock. But the question now is whether the bulls accumulated by the stock have withdrawn from the market when the stock price was at a high level recently. From the perspective of trading volume, it seems that there is no, but some capital may have withdrawn from the market in order to avoid the risk of stock price correction, but the accumulated outflow amount does not seem to be much. Although the bulls are still trying to maintain the upward trend of the stock price, it does not mean that the stock still has a lot of room for growth. The stock price performance in the past 2 days seems to prove that the stock is currently facing a correction pressure. If the stock price rises further, the stock may face greater selling pressure from profit-taking. Through the position distribution data of the stock, we can see that this week the stock has generated some positions in the $317 to $350.10 area, and the current price of the stock is at the upper part of this area, which shows that the stock is still supported by the bulls. The stock currently has a large number of positions distributed in the range of $294.10 to $259.90 and below this price, which means that the long capital that entered the market at a low level has not completely exited the market, so it seems that it is not easy for the shorts to significantly lower the stock price. But we also noticed that the stock has accumulated a large number of profitable positions. The current position profit rate of the stock is as high as 91%, which will undoubtedly suppress the rise of the stock price. If the market does not choose to pull back around $350, the next target price of the stock may be $400, but now it seems that neither the technical level nor the news outside the market supports the stock price to soar to the level of $400 in the short term. So I think the stock at $350 or slightly above may be the top of this wave of rising trend. There are 2 pieces of news outside the market recently that seem to be a bit unfavorable to Tesla stocks. There are reports that Tesla's sales in China have fallen sharply, with sales in May falling 56% year-on-year. The Chinese market is crucial to Tesla, and such a sharp decline in sales raises questions about whether the company can maintain its competitive position in the world's largest electric vehicle market. Chinese consumers are increasingly favoring local electric vehicle brands such as BYD, which offer competitive models at lower prices. In fact, Tesla electric vehicles should be very competitive in technology, but the price seems to be higher than that of Chinese local brands. Data shows that in the first week of May, the Chinese electric vehicle market showed an overall upward trend, but there were some exceptions. NIO Auto rose 13%, Xpeng Auto rose 24%, BYD rose 15%, and Tesla fell 58% from the previous week. The reason why Chinese consumers prefer local brands may be related to the publicity and marketing strategies of Chinese local brands. At the same time, due to the weak Chinese economy and declining consumption power, consumers with insufficient budgets choose cheaper local brands, and this trend may exist for a long time. If the United States and China cannot reach a trade agreement, the United States may resume high tariffs on China, which will continue to affect China's economic development. The sales of some high-end brands, including some luxury brands in China, are expected to be severely affected. In addition, there are reports that the United States may cancel the $7,500 federal tax credit for electric vehicles, which may further put pressure on domestic sales. This tax credit has been a key factor in promoting the popularity of electric vehicles, and canceling this policy may make Tesla's cars more expensive for consumers, thereby suppressing demand. Wall Street analysts have given Tesla's stock a comprehensive rating of hold in the past 3 months, based on the ratings given by 38 analysts. Among them, the buy rating accounts for only 44.7%. The average price target for Tesla's stock given by these analysts is $289, with a high of $450 and a low of $115. This reflects that Wall Street analysts are cautious about Tesla's stock. Although Tesla's current stock price has lost 30% from its highest level in December 2024, some analysts still believe that the current value of the stock is overvalued. The stock is still technically in an upward trend, which means that there is still a lot of long capital in the low area of the market that has not yet exited the market, so the stock price cannot fall. But as mentioned earlier, the stock does not seem to have much room for further rise. Not only is the stock facing technical pressure to pull back, but the entire market seems to lack catalysts for further rise. Once the profit capital chooses to sell, the stock may reverse and fall. Of course, the support position of the stock is also obvious. Since the stock has accumulated a lot of long capital in the low area from March to April, even if the stock price pulls back, it is expected to be difficult to fall below the $294 level. In summary, I don't think the stock will break through the $365 level, and then the stock will enter a correction trend, and the target price may be around $305. Okay guys, this is my price prediction for Tesla stock. Thank you for watching. If you agree with my analysis, please share and subscribe to my channel, and see you in the next video.